Retail sales slumping, an unexpected drop. First time we've seen that this year. So, Richard, how's the consumer doing right now?
Well, you know, Sarah, we really serve the homeowner. The customer of the Home Depot is the homeowner, whether it's a DIY customer working on their home or the professional customer who's serving that homeowner. And what we've seen throughout our history is that demand for home improvement is really driven by home price appreciation. When your home increases in value, you tend to view it as a smart investment. You tend to spend more. And we really saw that over the last few years. When you think about what's happened to that homeowner, over the last 2 years, we've seen 30% home price appreciation, really unprecedented in modern times. And that equates to 40% increase in home equity value. So the home equity value of the housing stock of the U.S. increased by almost $7 trillion in 2 years. That's a lot of dry powder. What we saw, Sarah, really, we were expecting the consumer to show some sensitivity in Q1. And in our first quarter, we really saw a more resilient customer than we would have expected. And I think part of that is just the long-term importance of the home and the fact that we're spending a lot more time at home and just, frankly, wearing them out.
We are, but I don't have to tell you, Richard, that the housing market is in the Federal Reserve sights, and they are going to raise interest rates today by 50 or 75 basis points. And one of the goals here is to hurt demand, especially for housing, because as Tyler just mentioned, mortgage rates have already shot up. So what's going to happen to those higher home prices and therefore your consumer?
Right. Well, Sarah, I think it's important to sort of step back and think about who our addressable market is. We serve all 130 million occupied housing units in the United States, plus 40 million more in Mexico and Canada. And so in any given year, only about 4 or 5% of those homes actually change hands. That means for us, our customers, over 95% of them are staying in place. And so think about those owner-occupiers. Almost 40% of homeowners own their homes outright. Of those who have mortgages, 93% of them hold fixed-rate mortgages. And so really for 95% of our customer base, mortgage rates just really aren't that relevant or meaningful. They're not out there looking for a home. What's interesting to us is we're hearing anecdotes from our customers saying, look, mortgage rates are increasing. I love the fixed rate I'm in now. I'm going to stay put. I've got a lot of dry powder. I'm going to remodel my home. And that's where we're seeing our customers headed.
Naftali, what about you? How do you respond to how the consumer is doing right now? Because your industry has also been very affected by COVID and now what we're seeing, which is huge demand for travel.
Yeah, so good to be with you. Thanks for having me. And we continue to see very strong demand for travel and cruising. And since we got back to the water a little bit less than a year ago, we've continued to see that consistently and the pent-up demand. We had a great secular trend before the pandemic where the consumer preferences shifted to experiences to things. And that obviously got reverted into the pandemic. And now when travel is easing, restrictions are easing, I think what we see is the consumer really wanting to travel, gain the experiences, re-engage with the world. So we've seen very strong demand over the last year. It translates into our bookings volumes that are higher than 2019, our pricing levels than 2019. We see when the consumer gets on our ships, they spend more money on and willing to spend on great experiences. And we haven't really we haven't seen any changes in that. So the resiliency is definitely evident in what we're seeing.
What's happening with pricing? Because a lot of you guys in the travel sector have very strong pricing power right now. It costs so much more to get on an airplane or stay in a hotel. What about cruises?
Yeah, so we continue to see that as well. And I think it's really about delivering the experience. And what we've seen is that the consumer is willing to spend for great experiences following 2 years that they haven't been able to do so. And really re-engaging with the world, with their friends, just gaining kind of those new experiences. So we continue to see that again as they get on our ships. we have much more to offer to them, either food and beverage offerings, excursions, and they're willing to spend time and money on those. So we've seen that pretty consistently.
So are you continuing to raise prices now with this strong demand, Naftali?
Yeah, and our pricing is higher than 2019 levels, and we obviously also building our occupancy levels. We're gonna, this quarter will be between 75 and 80%. We'll be back to 100% by the end of the year. And yes, and with that demand, we're obviously seeing higher prices.
What about you, Richard? What's happening on prices in Home Depots?
Well, we did see more inflation pressure at the beginning of the year than we would have anticipated. We were anticipating, call it 5% inflation in our input costs, and it turned out to be twice that. We always maintain that we're going to be the advocate for value for our customers, and we know exactly where we're priced. But like I said, the customer has proven resilient, and home improvement demand is strong, and so we're really seeing solid demand from that home improvement customer.
So there's a disconnect from both of you, what I'm hearing and what we're seeing in the market. Naftali, your stock is down 50% this year, and people are worried about recession. So how do you square that?
Yeah, well, I think we're part of the just broader economic and financial markets reaction. Our business is actually accelerating, and just in 10 days, we're going to bring the last ship back to operations. We're going to have all 60 ships of our fleet sailing across the globe in our key destinations. We're building the occupancy, as I said. We were in 60% in Q1. We're going to be 75 to 80% this quarter, and 100% by the end of the year. We turned operating cash flow positive, so we are on our recovery trajectory, and everything we talked about in terms of the consumer demand and the pricing. Obviously, we feel very optimistic and going into kind of the rest of the year, and we're just part of the broader financial market that obviously is not just for Royal Caribbean.
I mean, it is, Richard, a kind of a weird phenomenon with you guys, and we hear it from a number of consumer CEOs all day on CNBC that the consumer is still in great shape, and yet everyone's so focused and worried about a recession. Maybe it's going to be next year. Maybe it'll be in 10 months, and maybe it's a strange place to be. How do you tackle the recession question?
It is a strange place to be. It does feel like there's a bit of a disconnect there. Again, we're focused on that homeowner, but I can tell you, we survey our customers, and they tell us that their intent to do projects of all sizes has never been higher. We've been measuring this intent for 20 years. Never indexed this high, and the professional customers who serve them tell us their backlogs have never been healthier. Try to find a remodeler right now to execute a project. It's hard to do, and I think part of this really is a byproduct of the fact that the home has never been more important. We spent a lot of time in it over the last 2 years, and we also think, Sara, we've always seen for the home in times of uncertainty, there's this kind of nesting phenomenon in some respects, where the home becomes more important and folks are willing to invest more in it. There is a bit of a departure here in a lot of the sound bites moving across the headlines. But look, we've proven to ourselves over the last few years, it's better to be great executors than great predictors of the future. At the same time, we see a healthy customer.
Yeah, I mean, they're nesting at home, but they're also going out and they're booking cruises. So, Naftali, as the CFO,
right. No.
How do you prepare for, I don't want to say stormy seas. I didn't mean to use a pun in your industry, but how do you prepare for tougher times for the consumer while things are going great right now, and yet these predictions, including the fact that Fed policy is changing literally by today, could have a material impact on the consumer going forward?
Yeah, so I think over the last 2 years, obviously, we went through a meteor that hit our industry, and I think we've proven out the resiliency of our company and our industry. And I agree with Phil. We're focused on execution, bringing the ships back, delivering the best vacation in the world. And we are really a great value proposition for the consumer as they want to take their vacation. So we focus on that, mitigating whatever pressures that we have around the inflation, and really focus on executing on our strategy and really delivering those vacations as best as we can. And we see that in the demand that we're getting from the consumer, the guest satisfaction scores, and the pricing that that we're seeing in our bookings in our product.
But Richard, I guess what I'm getting at is it time to be more prudent? Are you, for instance, are you still hiring as much as you were a year ago? Are you looking at expenses? Are you looking at being more prudent to prepare for a more difficult environment?
Well, I tell you, Sarah, what the COVID environment taught us was that we needed to manage this business on an extremely short cycle, and we're able to. You think about the major inputs for us, it's inventory levels, it's cost positions, and it's staffing. We watch all of those in a microscope, and we could have never predicted the environment of 2020 and 2021, and yet we were able to flex to meet it. So we really have kind of two perspectives right now. A short-term perspective is high degree of vigilance. We're going to lean into being there for the customer demand when it's there. But in a long-term sense, Sarah, we're bullish on all of the underpinnings of home improvement demand. And so in a long-term sense, we continue to invest in our business. We continue to invest to deliver the best customer experience in home improvement. And that's how we'll manage the business.
So it sounds like neither of you are really pulling back. Nobody's worried like Jamie Dimon about the coming hurricane. Naftali, what else has the consumer told you post-COVID? Because clearly your industry went through one of the biggest disruptions among any industries. How is the consumer and the cruiser different in terms of expectations and what you have to do to provide that for them?
Yeah, candidly, it hasn't really changed much from the pandemic in terms of their expectation. They're expected, they want to come on board our ships, have a great time with their family and friends, and have a great experience. And that hasn't really changed. So really, we're focused on delivering the best vacation, and that's, we have new ships coming. We have 8 new ships that we did not have in 2019 that aren't joined our fleet. We have an active pipeline of continue to innovate on our product. We have private destinations that elevate that experience, and a lot of investment in technology, both commercial and efficiency, to make sure that we deliver that vacation and on those expectations. So we continue to invest in the business as well through our ships and other investments. And I think the pandemic has taught us to be agile and nimble, and we've done a lot of things throughout the pandemic. Well, we were not servicing our guests, to really reshape our cost structure and really think about how do we leverage the platform going forward in the next couple of years, and that's what we focused on.
What about you, Richard? I would imagine that there have been some shifts in terms of what people are buying or how they're thinking about their homes post-pandemic. Have you made any big strategic changes in the business to address what the consumer wants now?
We really haven't, Sarah. I think that the most encouraging demand signals we've seen are what we call demand for projects. We saw strength in the middle part of the last decade that was driven by a few categories: appliances, power tools, and a few others. And we thought it couldn't get any better than 2014 and 15. But over the last 2 years, we've seen really equal lift in demand across all of our categories. We've grown by $40 billion in 2 years. And that's what's so interesting is it's really equivalent across categories and really geographies. And so what do we think about that? That's just a sign of a healthy homeowner and healthy home improvement demand in general.